Hello, this is Vance, and this is Thursday, November the 15th, 2015. These are the CL trades for today using the slow hand method for price action. Kind of an interesting day, kind of like a big range day today, more than anything else. Price traded down, and then the inventory report came out, which indicated a surplus over 7 million barrels. Price didn't really fall off that much. Found some support, and then it was really kind of a reversal. So it was really kind of, it was almost like a yesterday in reverse, where price has moved down and then moved back up. You can see yesterday was like a big mountain. Price moved up, then moved down. Today price moved down, then moved back up. So again, we're trading between that, let's call it the $44 to the $50 zone. It's $47, so it's kind of trading in a fairly narrow range. I don't know, I think there's support around $45. I think price is going to go down much further than that, but wait and see. You never know what's going to happen in the markets. I don't know what's going to happen tomorrow. Just trying to anticipate what will happen in the short term so we can trade for profitability. That's pretty much it. So let's talk about the trades a little bit. We'll look at there's the inventory report, where things start kind of bunching up around just prior to the report, and what's happened since, and how price really turned strongly around. And we had a couple measured moves, like a measured move up here. You see price pull back down twice and so forth. And so thinking of the market moving in twos is always, beneficial. So let's take a look at that. It was really this leg really was a measured move. And we had a couple of moves down as well, but let me try to talk a little bit about that. In the general grand scheme of things, I think the first move took place right here when price fell off. This was just after 8 o'clock, just after 8 o'clock. So this is really the first move down. Now, going into the sell, I had marked off that prices. It's an obvious bias down, and from the overnight, even though price traded up, I had originally the support right across these lines right here, but you can see that price moved fairly unbroken down here. I mean, we'd have a break of this trend channel here, move down further. So really, this is really the first move down. If you see price slowly move back, and maybe there's two moves here. Price makes a new high, pulls back, moves up again and makes another new high up here. And so it's really kind of like two moves up, like as far as where price is finished up, if you squish these bars up. Because if you go on a longer time frame, you'll see that price, there was definitely two moves here. One up to here, pulls back, and then a move up to here. And then, of course, it fell off from there. So that's the way it is from that perspective. And this move here, the magnitude of this move was almost, like you see, if you look at it from here, you look at the move down to this area right here. Let's put it down right to this spike down here. And if you pull it right back down to here, you'll see that this move was really down to this area, very close to it. And if you took it longer, so there's that one move, and if you take this one, if you did the first pullback, failed, second pullback, and this is a lower low right here, you can see that perfect measured move. So price really moved down here, and as they're moving here as well, like you say, this is first pull, this is two pullbacks to this area, which I marked out as really the first short. So let's try to make this a little bit bigger. See, I will go very slowly and see if I can you can follow along with me as I go through this. Okay. Let's get rid of this. Okay. So really the first trade I saw was right here. And the reason I saw it was the first trade, I had this marked in here like this. I made it a little bit higher. And you can see that there's this first failure. Now, you don't know whether you can see it touched here, this channel here, and if you double it and you bring it to this bottom like this, off of this one right here, is price going to really get down to this area? So you've got touch right here, moves up, you get the three touches at the top. So when price moved down here to this area, you have a break of this channel, you have a pullback, you see a little bit of a tail. So it's really like a second entry short off this trend channel after the break of this trend line. We figured that we'll at least make a new low, given that there's a spike down right here. And as you see, price continued to move on through that. Now, once price got down in this area, could you have taken a long here? Because this is a second entry long right here. You know, this second entry long. Price makes a new high from up here. First entry pulls back down to a new low, second entry. But it's within this channel. And that's why, and you don't have this yet. I mean, you have this, but whether that's in the overnight, so you put less stock in overnight touches. Here's earlier this morning at 5 a.m., but you can see definitely there's a, this is really confirmed, these two. But whether or not you caught this, was there an opportunity to get in here? You could have gotten on this one, I guess. This is looks like a bit of a trap. Price moves up, pulls back down, and then moves up out of here. And look where the failure occurred. It happened right at the top of this channel. And it really respected. Every time a price kind of up here, it kind of bounced off this all the way down. Now, I've marked this one off as a trade, as a second entry short off of this channel. I marked it in green because it didn't really break the trend, this channel with authority. But if you see price moved up here, pulls back, moves up again, and then fails. So it's really like a second entry. This is a second entry short. But again, I marked it in green because it might have been a little bit harder to see. Not only that, but looking at the fact that we're getting close to the inventory, because right now it's at 9:30 and the inventory report's 90 minutes away. Down to this area, you see price, and then there was another pullback. Price moves up to here, failure, fails, second entry short right here. Now, it's not a good bar to go short on. By the time you go short on here, you can see this is kind of indecisive, and now we're getting really close to it. This is after 10. This is 10:21, 40 minutes to the report. How price is going to behave going into the report, we don't know, and so you can see that there wasn't enough room to get to the bottom here. It pulls back, pulls down here, makes a little bit. Now, these are measured moves. But right at 11 o'clock, when the report came out that there was a surplus of 7.1 million barrels, I think it was, price kind of gyrated, but it spiked up. So we really didn't have, you would expect that if you had that much of a surplus, price would really move down significantly, but it didn't. So that tells you something. This is right after the next 10 minutes, price is trading in a pretty narrow range. So buyers and sellers, it really is like a doji. There's buyer, no one's taking control. It does finally, sellers do take mild control, move the price down somewhat, creates the low of the day, but then it doesn't stay. And then we have this reversal type pattern at the bottom here, particularly this one, first entry, pull back, second entry. So you have a break of the channel, a failure to a new low. This is a second entry long. Now I marked it in green because at the bottom it's really close to the report. It's only a half hour out. But when price makes up to this area, here's a second entry short. The first entry fails, second entry short down here after it makes a new high from the previous bar, and you can see this is a second entry short, which would have worked. But notice where it bounces. It bounces really right where these previous bars close. So and you can see that there's price moves down the first time. You can see this green trade right here, where this green bar, little bull doji. Price moves down the second time, and immediate failure. And this really turned out to be a great trade because your runners are safe all the way up here. Two pullbacks. Again, another opportunity to get in here. Now, why I mark this in green is because now we're at the top of where we've had previous resistance, and it's equivalent to this. Now, take away from them if you don't consider this a channel, but you consider this really a range. The top of the range is right through here, and so you think that you're going to have some resistance along this tops. Now, this box here, I don't know what to call it. I'm thinking maybe call it a red zone box, I guess. But if price gets through this, I think it'll go higher. So let's call that. So we have this resistance. You can see the resistance in this area here in this box. If price can get through here, it should go higher. And you can see that it does make it through. Pulls back, have another second entry long within this box. First entry, second entry, it goes higher. And all these moves here are really measured moves. So price makes a new high, first failure, second failure, makes a new high, first failure, second failure, makes a new high. And it's on the right side of the EMA. We haven't had any real break of the trend channel with authority. I would have thought that we have this pullback, but it didn't occur. And then price makes a new high here. Now this is a second entry short. Again, it's really whether you go short, and this is where price opened. Don't really know that, but then we have a break of the trend channel, fails to a new, and then another second entry short here. Now it doesn't break to a new high. Mac often talks about it. He likes to see a break of the trend channel. So you have a break, failure, and then this is the first entry, a pullback to a new high. So, but this didn't. The pullback would have been a little bit higher than that. Then he would be more confident. But it was still. I was looking at more along the basis this would be a measured move. Move down here, first pullback, second pullback, and then if you measure it out with an arrow, this is a perfect measured move right down to here. And so as a result, because of that perfect measured move, I was looking at maybe this was going to be the bottom. So you have you have a double bottom here, and you can see almost a triple bottom because price moved down first time, fails second time. This is a second entry long, and if you keep your stop below your 15 ticks, it eventually worked its way out. Now, there was some congestion, might have shaken you out, but then there's another opportunity to get in right here. Now, it's a little bit more, you're a little bit higher up, but in both these cases, you got room to get to this double top right here, and price really just into the close and beyond, it just moved up significantly. So what does that tell you? Well, it tells me that price is still like, oil at below $46 is really hard to get down below $45. Between below $45. And then we're trading the November contract, by the way. And so that's only up until the end of next month. So it's not really long ways out. And if you look at the other contracts, if you look at December, January into February, you can see that price of oil is over, in most cases, close to $50 a barrel. So the whole draw is that price, the price of oil at these levels is too low, and that it should be above the $50 mark easily and probably beyond that. We see that in Canada. We see that, what does it cost to produce a barrel of oil? And in the western provinces in Canada, it's a lot more than $50 a barrel, I can assure you. And because of that, there's not as many rigs out in the field. There's a lag time. There's going to be out, if price stays like this for another 6 months or a year, there's going to be more and more small, medium-sized operators are going to shutting in production. They've already started that. Less drill rigs operating. Eventually, there'll be a decline in the price of oil. And if you have dwindling supply against constant demand, the price will have to rise. Anyway, there's a whole section on supply and demand, and commodities, the same thing. I'm looking at supply and demand for the price of oil and where prices should be in the very short term. That's all it is. It's during the day, as opposed to over months or years. Just looking at it in the short term. And so, if anybody was interested in it, I was just thinking about this the other day from my old economics courses, is that if you look at a demand chart or a supply chart and where points of equilibrium are as far as price won't move, maybe I'll do a little bit of a talk on that sometime, because it's quite common in economics to look at how price responds. Just from a price, there's only two inputs. There's the demand of oil, there's a supply of oil. On the left-hand side of the chart, you have price, and on the bottom side of the chart, you have supply. As supply goes up, price will fall, and as supply goes down, price will rise. And there's some point that there's an equilibrium of price. The price of a good equals the supply of a good, and they call that equilibrium. Prices are very seldom in equilibrium, because if we have price and equilibrium, you have there's no movement, so there's no pent-up demand. If the amount of a good, if someone's willing to pay for a good today, right at this moment, completely equals the amount of supply, price will stay the same. If there's less supply, more demand, price will rise. If there's more supply, less demand, price will fall. And you can see it. You can see this on a chart. It's very simple to see. It's a very simple idea. We're doing the same thing trading oil. We're looking at, but what we're trying to anticipate is that from one time period to the next, is there pressure for demand, or is there pressure for, or is there a greater supply, or is there greater demand? Moving off that point of equilibrium, because prices are never going to be completely in equilibrium. Because if it was in equilibrium, if prices were perfectly in equilibrium, there would be no price rise or fall. There would be just one price. Price $50 a barrel, and would always stay at $50 a barrel, because you're producing as much oil at that price as absolutely needed, and there's no increase or decrease in it. I hope that makes sense. Anyway, this is Vance. If you have any questions, please let me know. Bye for now.